And so at the end of the day, we're just showing individuals, business owners like yourself, how to be able to flip the script on the banks and do exactly the same thing. We get the money from the banks, OPM, but at 0% interest, and we put it to work multiple times throughout that 18 months to be able to really make the strongest ROI to grow and scale our companies.
Welcome back to the Money, the Mindset, the Mentoring podcast. Brandon Elliot with us in the house. We are talking here about one of the things that I know pretty well because I run a mortgage brokerage up here in Canada, and we talk a lot about credit. Now, Brandon, we're going to talk about maxing out some credit cards, running up some crazy-ass debt, and just putting people in crazy situations. Is that what we're going to do?
That is not what we're doing, my friend,
That's
but
not
I love
what we're
it.
doing.
I love it.
But wait a second. Hold on a second. You showed me this little stack later on, just last time we spoke. Just bring out that stack.
What's little about this, baby? Come
wow,
on.
Those are not little stacks, dude. That is a stack of cards, man. That's like a Costanza wallet. Like you wouldn't even fit that. Like that's insane.
That's right.
That's insane. So, do you have a hard time sitting for dinner when you go for dinner with your friends? Like you get like
it's bulging, baby. It's bulging, but you know the world record, check this out. The world record, it's like 1,700 something credit cards. One individual, open active accounts. How crazy is that? It's impressive, my friend.
Could you imagine the postal person dropping off all those credit card bills?
Yeah, it's like here's
the
another
post
one.
office, like
here's another.
Like, that's crazy.
Yeah.
How would you even manage that? Like obviously spreadsheets and like
spreadsheets. Yep. So spreadsheet, the best way to do that, it's a very common question that many people have. It's like, how the hell am I supposed to deal with all these cards? Put it in a spreadsheet and then put it from the beginning of the month to the end of the month with your statement closing dates. Okay. Because those are the dates that really matter. Obviously, you got to make sure you're paying on the due date, right? But whatever the balance is to the statement closing date, that gets reported out to the 3 bureaus. So
that's the thing that I always get confused by, because I mean the closing dates are always at weird dates in the month, and rather than just like I just want them all in the first of the month.
Yeah, so you can change those, by the way. So it really depends on when you originally applied for the card, right? So when you apply for it, you get approved for it. Then typically there's an opening date, and then 30 days later there's a statement closing date, right? And then about 3 weeks later you have your due date. So that's how that works. But when you get a bunch of credit cards, I recommend calling in and requesting a lot of, kind of splitting it up however is convenient for you. Like every 7 days, a big chunk of cards are due, and then it just makes it a little bit easier.
Okay, so let's talk about why opening up 1,700 credit cards is not an insane thing to do, because most people would, like in the mortgage space, like when I'm filling out somebody's credit app.
Yep.
And if they had 1,700 credit cards on
you got to explain each and every one. It's a long task.
I think most banks would say thanks, but no thanks. Like we're probably not gonna lend you any money for your mortgage.
You'd be surprised.
Well, talk to me about that. I mean, in Canada, that would be very strange. I don't know many banks that would look at that, because the credit exposure on that person is a lot, and banks Schedule 1 banks tend to shy away from that.
Yeah, and so I like to get a lot of business credit cards. Of course, personal is going to set you up for tremendous success as well. But over the longevity of time, you should be moving things over more onto the business side, right? Like everything we do is business related. So you want to hide things on the business side. But yeah, man, I think it just comes down to like success leaves clues, right? There are a lot of people out there that have come up originally in real estate or any type of industry, utilizing credit, leveraging it properly, and then being able to compound their success. There's been plenty of people that you can look up online that have bought like $160 million real estate building with a credit card, and there's several people that have done that. And so trust me, and the points that you get from it, the protection you get from it, it's not a bad idea. It's just a different way of leveraging. And we all grew up with the same stigma and limited beliefs that you should only have, 1 or 2 credit cards, maybe a third one for an emergency. It's so far from BS. Of course, you don't want to be paying the mafia rates of 20, 30, 40%. Nobody does. You don't need to. If you understand the different, kind of ins and outs of playing the game properly. It's the same exact thing from borrowing money from the bank or from friends, family, raising money, whatever it may be, except you're doing it on your own with your own credit. And of course, we always like to promote 0% interest.
Yeah, so let's talk a little bit about that, because I think this 0% interest is the thing that most people would be interested in. The idea of, you're signing up for your, we've got MBNA and some of these other credit cards. I don't know if you guys have those, and they're typically your 30% per annum credit cards, and that kind of thing. I would think would be something that you would not want to have in your inventory.
Yeah, so there's several different types of credit cards, right? You got personal, you got business, you got cash rewards, you got travel cards, hotel cards, 0% interest. Of course, if you are a business owner looking to scale your company and you need a little bit extra leverage and protection while you're doing it, I mean, there's insurance cards out there, for God's sakes, that that you don't need to pay for the insurance. You can use the card and it gives you that same protection. So there's ways that as a business owner you would typically want to leverage and be able to diversify, grow, and scale your company. You would obviously want more on the business side, 0% interest.
So where are these 0% interest cards? Because I mean, we don't see them a lot here. You see sometimes they'll run a special, like a 3-month or a 6-month special. You were telling me, I think, the other time that there's like 18-month 0 interest credit cards in the States.
Yeah, up to 24. Typically, it's 6 months to 24 months. On average, it's 18 months. That's the big bulk of it. 18 months, 0% interest. A lot of these cards come with introductory offers of 0% interest, right? They try to get you on the hook of like, hey, they know Americans will mess things up, right? If they give them enough credit. And that's just, and people are messing it up out there nationwide for the simple fact that they're not taught this in school. They don't know how to leverage properly. And that's what we specialize in. Like, we want to make sure people aren't buying the $20,000 Gucci sweatshirt, that they can't afford on a credit card to look cool. That's not what we're doing. We get credit, we get funding so that we can actually show you how to be able to put it to work in investments like real estate, something that's a physical asset that you can see, that you have, it's calculated risk, right? And, or growing and scaling your own company. But, yeah, man, I think it really just comes down to understanding the difference between good debt and bad debt and really, position yourself properly with it.
Yeah, I think one of the things that it was interesting when we first hit and we're like, look at this big stack of credit cards. We're going to go out and get crazy credit cards. I'm like, oh God, this is going to be an insane conversation. And then the next thing you jump in and we're going to talk about financial literacy. And it's like, hold on a second. How can you say that both in the two? Yeah, well, you can boring. Say that. How can you say this? It's boring.
Yeah.
I'm going to go mad bank and go buy my Gucci.
Yeah.
But the thing is you really jumped into financial literacy and then started talking about assets versus liabilities. And I think that's something that's extremely important to understand if you're going to go down this route. And debt, like all debt, I mean, money really is debt anyways.
Exactly.
Like the fundamental basis of what money is, if you look at where currency is, it is debt.
100%.
So, I mean, you already have debt even when you look at money. And that's just a mindset shift that people need to have.
That's
and
all
I
it
agree
is.
with 100% of that. It's
just a mindset shift. That's it. All it is.
Yeah. And then we look at the actual asset or the actual instrument itself, which is the credit card. So we're saying, okay, well, first of all, we're not going to be stupid. We're not going to go out and buy that, fast car. We're not going to go out and go on that big vacation or whatever. The credit card is being used for assets only. In other words, it needs to pay us back.
Yep.
Now, in my understanding, it needs to pay us back at a higher degree than what it's costing it. It's some sort of, X factor. Would you agree with that?
Sure. And that's why if it costs you 0% interest, is it costing you anything?
Well, that the 0% is just a thing of beauty. Like that to me is now it's just you're playing a margin game, because eventually that margin will be called in 18 months and you have to make sure that you can pay the piper in 18 months.
Correct.
To make sure that is being looked after.
Yeah, and so this is a big thing that people, it's hard for them to wrap their head around it. Well, when it's due, then what? Well, you pay it off, my friend. Like, don't buy investment opportunities or assets that are going to take 30 years to pay off. This isn't a 30-year fixed type of program. Yes, we can teach you how to get a 90% approval odds with any bank out there and to get the highest limits, best terms and conditions. Those longer term type of investments, they're not going to be in the form of credit cards, and it's damn sure not going to be at 0% interest. But we can still show you how to get those and get the best terms and conditions with a 90% approval odds. However, when it comes down to the 0% interest, keep in mind, if it's 18 months before it's due, be in and out within 12 months max. That's what I like to really focus on. And, also on top of that, because there's so many banks out there, we have a list of 9,500 banks nationwide, state by state, in the order of which ones are giving out the most funding. With that being said, like, you're going to be able to go for 40 to 50 cards within a 30 to 90 day window time frame. The good news is every 6 months you can get more capital. So we teach business owners nationwide how to get up to $500,000 within 30 to 90 days. And you can repeat this process every 6 months. We don't encourage, like, hey, rob Paul to pay Peter type of situation. But just in case if 18 months is coming up, you need an extra couple months. Well, you've already mass applied and got more funding an additional 2 times, because every 6 months you can do this again.
Every 6 months you can mass apply.
Yep. And a mass apply, just for like breaking it down here, it's simply an application sequence. When done correctly, you can get a 90% approval odds. You're applying for anywhere from 10 to 50 plus credit card applications, along with other lines of credit and other, bank products and services.
And you just keep track of them on a spreadsheet.
Correct. Yep.
Interesting. Okay, so let's look at it this way. So let's look at the first 10 credit cards and start breaking this out. So you apply for 10 credit cards in this mass application. We won't even go for 9, whatever. We'll just say 10, dumb it down, keep it simple.
Yep.
And so you apply for 10 credit cards, you get all 10 credit, or say you get 9 because you said 90%.
That's right.
And so, each of those credit cards what type of limits are people typically applying for?
Yeah, so they can get as little as a couple grand. We like to stay as low as $5,000. We really don't want to go lower than that, but we've had people get $150,000 on one credit card. Many people are getting anywhere from $25,000 to $50,000 per credit card, right? But yeah, when you start, there's a lot to it when it comes down to doing a successful mass apply. And that's why, because the information isn't being taught out there, it's very crucial to understand the financial literacy of how the banks and lenders are judging you, so you know how to play the game, right? And so there's literally 45, moving pieces on how the banks and lenders are judging you that we teach. It's not just about your FICO score. It's not about what it's about what you say on the applications, your 6 boxes that make up your credit profile, how long you've been with the bank, how many products and services you have with the bank, what's in your checking accounts, like what you're saying on the applications. There's a lot to it. So when it comes down to getting those 90% approval odds, you got to master that. And the good part is, like, once you identify where the banks are actually pulling from, which bureaus, TransUnion, Equifax, or Experian, and then the bank rules of thumb, right? There's these bank rules of thumb out there that will cripple you if you don't know them. Like Chase has a 2 and 30-day rule, meaning you can't get more than 2 cards with them within 30-day time frame. You can't get a third one, right? Or they have a 5 and 24 rule, meaning if you've gotten 5 credit cards with any bank in the last 24 months, 2 years, you will automatically get denied for any card with them. So you got to know these bank rules of thumb as well as the bank policies. For example, like Navy Federal Credit Union, they have an elite type of credit card, a flagship credit card. You should not apply for you shouldn't apply for that credit card if you don't have their elite checking account, their flagship checking account. If you have their basic tier credit, or if you have their basic tier checking account, you will automatically get denied for that credit card. So that's a policy rule that you need to know. And so once you understand how these banks and lenders are judging you, you'll know how to play the game. And that's how you put the cards in the right order and say the right things. You're going to set yourself up for a 90% approval odds.
So then you set yourself for 90% approval odds, and you're getting anywhere between, we'll say 5 and, we'll just go 100 grand or whatever. So let's just say your average is, say, 25 grand.
Sure.
So you're getting 10, so that's 250, so minus 25, so $225,000 of credit. And you're saying all of that is going to be 0% interest of some length and magnitude.
Well, so a lot of people come in, they definitely want the 0% interest. We encourage it. However, like I mentioned, there's 6 other tiers of types of credit that you want to focus on. And you want to, I encourage everybody to get a couple insurance credit cards, right? Because if you don't need to pay for your cell phone insurance anymore, all you got to do is set up that credit card on auto pay. If your cell phones, all of them that you're paying for, not just yours, but if you have a family you're paying for, if the cell phones are ever lost, damaged, stolen, you just file a claim and you get a new cell phone. Like, they'll send you a check for it. You can do it 3 times to 5 times per cell phone that you're paying for throughout the year. I mean, how much money that saves you.
So it's not just about the,
it's the lifestyle.
Yeah, so it's not just about the rate on it's the access to the services.
Yep. Yeah, I mean, it saves you money and it should make you money at the end of the day. And it should set you up with a better lifestyle in general, something that, it's fun to be a part of.
Yeah. Yeah, so I was at an event, my gosh, it was probably about 6 months ago, and an awesome event run by a friend of mine where they had a guy who came in, and his whole thing was just talking about choosing the right credit card that gives you the right bonuses so that, you're earning the points to get you where you want to go. And for me, I've never looked at any of that. Never.
Yeah.
And I'm always the guy who says no every time they ask me to sign up for something. And I don't know why. I just, I've never really looked at those things. And what you're saying is that should be part of your strategy.
Well, some of it should be. Yeah. I mean, when you learn how to utilize the proper credit cards for your lifestyle and you can maximize the points and the rewards from it, then you're saving money, you're making money. And then now you got all these points stacking up that you can utilize for travel hacking when you learn how to transfer those to different travel partners. Man, I've been flying first class, not just for myself, but employees, business partners, family. I've been flying everybody first class for a very long time, and I haven't paid for anything. So you naturally get that lifestyle that it's a better experience, and it's all because I know how to use my points, but I also know how to create my points.
Yeah, and that was one thing that it was funny. After I had that meeting with that dude, I switched around some of my credit cards. And now, for the most part, at minimum, I fly business class. But usually, if I'm flying anywhere longer, I get one of those beds that you lie down in now when I travel.
Get it. Come on. It's awesome. Yeah,
it's wicked. I couldn't get it. I'm going to Europe next week. I couldn't get it for that one. It just was blocked off, unfortunately. But, that made me sad. I got it at least business class.
Yeah. When we went to Europe, we did a first class Emirates flight where it comes with the caviar, the Don P, the private private bar up top. It comes with a shower. All that fun. It just makes lifestyle more glamorous, and you're networking with high level individuals that already paid $20,000 to $40,000 for those seats. They paid
unless they were smart like you.
Well, a lot of people out there aren't, unfortunately. So it's at least.
Well, they would have been smart to make the 20 or 40K. So let's give them credit on that side.
That's what I'm saying. So if they did pay for it, you want to network with them. And if they didn't pay for it and they travel hacked like me, then you want to get to pick their brain anyway and network with them because they're doing something good.
Yeah. Yeah, absolutely. Well, I mean, the old saying is, show me the 5 closest people to you and I'll show you your future.
That's right.
And I think that's so critically important. Yeah,
it is.
That makes a lot of sense. Now, when you're running those credit cards and you're looking at earning points, that would mean typically you've got to spend on those credit cards, correct?
Yes. Yep.
And so if you're spending on those credit cards.
There's ways that you can rotate money. If you don't have natural spend to be able to keep up with your business, you don't need it, then there's ways that you can kind of move money around. However, to kind of manufacture spend those points. However, most people are just paying cash or they're paying with the wrong credit card. So I encourage you to like switch over your stuff, use the right credit cards, hit those sign up bonuses. You get all those free points that you can convert it into cash and get a ton of money. I don't recommend it because it will go much further. If you'll get anywhere from 7x to 19x return on those same points versus $1 for $1 ratio if you just learn how to travel hack.
Yeah, that makes sense. And that resonates almost to a T what the fellow was saying when he was in our at that meetup.
Yeah,
he was saying the same thing. So hearing the same thing twice, that makes sense.
Yeah.
When you talk about manufacturer spend, I don't know what you mean by that.
Yeah, so that is, in the past, I've done a lot of this. I've done over 17 million when I was younger doing this. So what that looks like is you take your credit card and it's just a big circle, basically. You purchase something, liquidate that something into cash, and then you pay off the credit card, right? It's just a big circle. There's some small fees involved to do it, but it's worth it because if you're getting 3% on every dollar spent, then, and you're, per $1,000, that's $30 gross, right? If it costs you $5 to actually liquidate the process, do the full circle, then you're netting $25 profit. Does that make sense?
So no, walk
Okay.
me through that one more time. So you're buying something. When you say liquidate, what do you mean by that? So
liquidate into cash. So let's say you take your credit card, you buy $1,000 Visa debit gift card, right? It costs you $4 to be able to get that gift card. Now you take that gift card and you buy a money order with that same $1,000 gift card. You get a $1,000 money order that costs you $1. And then you take that money order, you deposit into your bank account. Now you pay off your credit card from your bank account. Just a big circle, right? That money that you spent, that $1,000, it fully goes right back. It cost you $5 to do all of that. However, that $1,000, it's a 3% cash back card, right? So it's 3%, meaning you grossed $30 from that transaction, just moving things around. Okay. But it costs you $5. So 30 minus 5, now you're at $25 profit. Okay. Now I did $17 million of that. Okay. Over a couple years. And so it's an easy way for you to get credit limit increases. It's an easy way for you to get a boatload of points. And then instead of cashing out $1 for $1 ratio and just getting that cash, which back in the day many people did, I encourage, if you're going to do it now and you travel at all, or you have any type of, if you aspire to travel at all, like, use it for the most badass places and luxurious lifestyles of like traveling the world for free, first class, at your convenience with your loved ones. Like, that's, until you get your business to a position that you are needing more capital. Like, we spend $50,000-$60,000 a month just on ad spend. I use the right credit cards, Gold, American Express, that I get 4x return on that ad spend. So those points just, it quadruples, and that sets you up for more success at the end of the day.
Yeah, that makes sense. I think the idea, like, when you look at your ad spend, I think if there's anything that listeners can take away from, because the other one sounds super confusing, the first thing is just choosing the right card for what you can collect maximum points on when you do things like your Google ad spend or whatever, your Facebook advertising. I think that makes super, super sense.
For your everyday
the idea
spend.
of doing the money circle.
For everyday spend, you just want to protect yourself, basically. Use the right cards.
Yeah. And then the second thing is, and when you talk about the money wheel, some people will look at that and it won't make sense. And it's actually funny. The government does the same money wheel. When you actually look at how our whole ecosystem of the government does things. There was this story that somebody talked about that this guy goes into a hotel to go book a room, and it's not in the nicest area of town. So he's like, look, I just want to go look at the room.
Yeah. And
then the lady at the front says, well, if you want to go look at the room, you got to put $100 deposit down. And if you don't like the room, we'll give you your money back. And he's like, okay, I'm going to go look at the room. So he pays $100 deposit and goes and looks in the room. Meanwhile, the person at the front desk runs to the back and pays the housekeeper. And then the housekeeper runs around and then pays the supply person who supplies her stuff. And that then person pays the prostitute who rented the room. And then, in the hotel, the prostitute comes back and pays the hotel owner. And then the guy comes back out and says, yeah, the room wasn't really for me. Could I have my money back? And the person then takes the money back and leaves. There's all that economic churn, but there's no GDP. And that's how a lot of times money moves within the economy. It's just churn. And so what you're looking at is there's churn that's happening. There's no real GDP created out of it, but at the end of the day, that's not your responsibility.
Yeah. There are certain people that are like the banks, for example. When you use the credit card, they get their transaction fee with the merchant, right? So they're winning right there. They're already doing well. Next, when you're buying the gift card, they're making money. And then next, when you are getting the money order, they're making money. And then you're also paying for the gas to travel around to these things. So, and you're buying little knickknacks on the way when you're making easy money. So there's some things that do calculate into it. And the points at the end of the day, what is, created from that, these banks have all types of number, like they are making money from this stuff regardless, and they know how to put it in the right position. Plus they work out deals with the airlines and everything else. So a majority of people don't utilize their points properly, or the banks, airlines, they're inflating their points because more people have the cards, access to the points and so forth. So they just inflate it, and instead of your Delta flight that should be 60,000 points, they make it 360,000 points, right?
Yeah.
Because there's more on the market.
Yeah, that makes sense.
But what is crazy that I want to kind of touch on is like, this is flipping the script on the banks. See, like at the end of the day, you, me, like everybody out there, we give all of our money to the banks. We have all of our money in the banks, right? And then we're giving it to them at damn near 0% interest, right? They give us nothing percent back, very little. And then they're putting it back to work 9 times over. They average anywhere from 500 to 3,000% on that money by lending it back out to us and anybody else for personal loans, business loans, auto loans, mortgages, credit cards, and so they know how to put it to work. And so at the end of the day, we're just showing individuals, business owners like yourself, how to be able to flip the script on the banks and do exactly the same thing. We get the money from the banks, OPM, but at 0% interest, and we put it to work multiple times throughout that 18 months to be able to really make the strongest ROI to grow and scale our companies.
Interesting. So when you're looking at those the money cycle cards, those ones are kind of perpetuating little wheels. And then the ones that you're talking about, the 0%, those are sort of your working capital in the investments that you're making. Is that correct?
I don't know exactly what you mean exactly by the wheels. Give me more detail.
Talk about that's how you wouldn't use the one that's your points card to make long-term investments on, because there's the payoff would be longer than, say, the monthly billing cycle.
So any credit cards that
you'd incur interest.
Yeah. So any credit cards that actually have 0% interest, those are the ones that you're going to want to obviously, leverage. Like I just closed on a real estate deal that's a couple houses down. I signed yesterday. Today we're getting recorded. But that one, it's $210,000 down. I can use all my credit cards to actually be able to pay for that. And so I would want to do it at 0% interest.
And the lawyer takes that the lawyer takes a Visa payment as the payment, or how do you do that?
No, not lawyer. But you could use websites like Plastic or Milo, where they just charge a small fee, and then you could just wire it that way. Otherwise,
so the credit card creates a wire through Milo or
Plastic. Otherwise, there's other techniques and strategies out there that are faster, quicker, without headaches, through the manufacturer spending techniques, similar to what I was referring to in the past. But yeah, it really just depends. There's so many different types of credit cards out there. I encourage people to identify the different, their lifestyle, what they spend money on, and how they should figure out the cards that are relevant to them and their lifestyle to better their life and to be able to get more protection, more savings, higher rewards. And then afterwards, if you have a business or you want to start one, grow one, diversify, then you would want more of those 0% interest cards and on the business side. So it doesn't, if you have a high balance on it for 6 to 12 months or 18 months, it's not messing up your personal score.
Yeah, that makes total sense. Yeah, that the business to house credit in your business is the most logical thing to do because it is a separate entity. So it's not necessarily hiding it because, I mean, using the word hiding, I think is not accurate. I think when it's existing within the business, it's existing with a different entity. So the business is its own entity. So you're not hiding it. You're just not reporting it because it's not yours. It's the business's.
Yeah. So what I mean by hiding, quote unquote, is it's not reporting to your, it's not a personal credit card that's reporting to your personal. Because if it was, and there are some business credit cards out there that report to your personal, like Capital One, business credit cards or Discover business cards. And there's a few others out there that do the same. So those cards, if you maxed it out, even though it's your business, it reports to your personal credit profile. And now your utilization is all out of whack and your score drops 60 to 100 points because you have maxed out credit cards. You would want more.
Absolutely.
You would want more business credit that doesn't report to personal that you can hide or like put on the business side. And it's not messing up your personal credit profile, having it go up and down.
Absolutely. Well, you're going to have it report on the business credit bureau rather than on the person's credit bureaus, which means it's going to help your business credit bureau because that's actually beneficial for your business to show that it's leveraging and that it's doing proper leveraging. Yeah. So that's actually a good thing for your business.
It is true. And believe it or not, though, there's a lot of big banks, for example, or just there's all different types of banks originally when you were personally guaranteeing that credit. Mm-hmm. Because a lot of us will have to do that until you're really showing some really big numbers, $3 to $5 million annually for your business. If you want to show documentation on that, then, you can get more non-PG credit. And there's ways that we teach within Credit Counsel Elite that it takes about 6 months that you can get non-PG credit. But, and PG, personally guarantee, that's what it stands for. But when it comes down to, like some of these credit cards, they don't really report anywhere. You would think those business credit cards would be reporting to the business credit. Sometimes it doesn't, and it's just kind of floating out there. It's not reporting to personal. It's not reporting to business unless you have something negative. And if you have something negative, then it will pop up right away and it will report to both.
Yeah, that makes sense. Well, that's really cool, man. Like I've never looked at this from that perspective. And I think on the business side, I think if you're really honing in on the business side to fill that one up and fill the cup there, I think that makes so much sense. On the personal side, I think, as a mortgage broker, at least in Canada, that some banks might have an issue with that from a Canadian perspective, but we're backwards up here in Canada anyways. So, it's a Canadian thing.
So I've definitely got pushback too, as I'm buying real estate. A lot of my real estate now, I put it underneath business. So it doesn't even show up underneath my personal. Of course, they pull my credit, right? They want to see what's on there. But a lot of that, they just ask you questions of like, hey, why do it looks like in the last 6 months, you got a couple credit cards here. When I say a couple, you got 40, like why'd you get 40 credit cards? What's up with that? And let's see, some examples or explanations. And so there's typically good reasons that you can put in there, such as accounting, separation. Like I have several businesses at this point. And so, so when I was first starting and I had less, I would still have a bunch of credit cards. They ask you to basically just leave personal statements behind it for underwriting. And and it was one of those circumstances, like 3 different times that I was like, oh God, what's the situation going to be here, the outcome? And it's always been fine. I just had to give my own personal statement behind it.
Yeah, and I think depending on the lender and depending on the country, I think that's where it's going to really fit out. I think, Canada is just bizarre. Everything reports to the credit bureau. Like even all
business
our properties
cards too, right?
Oh yeah, like all of our business cards show on our personal, our mortgages in my holding company, because they still have to be personally guaranteed, will show on my personal credit bureau.
Yeah.
And so, you look on and you're like, you got so many mortgages. What the hell?
Yeah.
And so it's just, it's a unique experience.
Yeah.
but yeah, I think America's a little bit more forward thinking on that one. So that's that gives you some opportunity that way, which is great. Which is really, really good.
Yeah.
But I like how we started off with the idea of number one, hitting financial literacy, ensuring that you're doing something that you know where your risks are, you know where your opportunities are, and you're investing in assets. I think the other thing too is talking about having really good due diligence in what you're doing so that you know that you're going to be coming out with a positive outcome.
Yes.
It's not like I'm just going to put it all on black at the casino and hope that it goes well.
Yeah, and so anybody that even like comes into our space, we're really good at like getting the right culture to come into Credit Counts Elite, which I'm very blessed for. But we've had a couple people like try to sneak in, and like you could just tell like they don't care about the financial literacy part. They don't want to. They just want the money, and then afterwards they're going all in on something. That scares the heck out of me. So we do a deep dive into education on how the banks and lenders are judging you, but also Budget 101 and the big difference between, good debt and bad debt. And, we want to get everybody to the point where they have a strong business, that they have great active income, but on top of that, to diversify into real assets like real estate and have backup plans. Like the savvy investor that has multiple backup plans is always the one that, really succeeds, because I've never been a part of any real estate investment or many other businesses as well that it went exactly how we planned. There's always something, there's a wrench in everything. And, how you pivot, how you change up, really, it comes down to your education. How, are you expecting, if something does come up, what's your plan B, your plan C, your plan D? Many people have plan A. When that doesn't work out, they take a long time to pivot and they jump right to Z right away,
Yep.
And it's like, man, there's a couple other options we probably could have tried out before this and not take so long.
Yeah, that makes sense. Yeah, I think having, and that's even in the mortgage business when we're looking at people for financing, if they're in any sort of situation, you always want your plan A, plan B.
Yep.
Until that deal closes, you've got to have a backup plan because you never know what's going to happen.
100%.
And that's extremely important. When you're running a business, you always have to have contingency.
Yep.
If you think you're closing at a 25% rate, budget that you're going to close at a 10.
Yep.
And sure, and that's going to help you because you're going to be conservative in the way that you're budgeting, but you can be aggressive in the way that you're closing.
That's right.
And so you can really ensure that you're scheduling yourself for success, for setting up your meetings and your KPIs.
So good.
That's definitely makes sense. Yeah. And how many people you put through this course then? How many people have decided to make this kind of an endeavor?
Yeah, so we've had thousands over the years. At this point, we have 120 in our mastermind currently, and then I was looking at the numbers the other day. I think it's 250 in our 90-day challenge. So our mastermind is for a full 12 months. It's for a full year. We're doing life together, we deep dive into everything, right? Business credit, personal credit, fixing credit, and then liquidating, like getting all that funding, leveraging it. Get life insurance policies, investment into real estate, travel hacking, you name it. But the 90-day challenge, that's just for 90 days, and they get the educate, fix, and then personal build.
Interesting. Now, how many people do you get? One of the big things we're having, again, wearing my Canuck hat for a moment, how many people do you have going down to the south? Because that's a big thing that we're seeing right now. There's a mass exodus from Canada down across the border, who something like this could be something that would be very interesting for them. Yeah. Is that something that is an opportunity for those kind of people?
Yeah, so we do need individuals to have a social. And so if they can get either like a working permit type of number, like ITIN or a social, really the social is going to be the bread and butter. It just makes it the easiest process. ITIN is still a possibility. It just takes longer, and everybody's very impatient these days. So everybody wants things like yesterday. So, and I respect it because I'm a results driven type of individual myself. But but just setting that expectation, like if you have a social, you have an address in the US, and you're willing to put in 5 hours a week to really succeed with this stuff, within 30 to 90 days, that's our bread and butter. Give us your all on that. Obviously, the person that puts in more than 5 hours a week, they're just going to soak it up more, and really get it.
What are they doing in that 5 hours a week? That's a good chunk of time. What are they doing?
Yeah, I mean, it's nothing in the big picture of things to start making the changes, but it's really soaking up the information first off, because you're going to learn about 70 to 80% of what we're teaching in the course, but you're also going to have a ton of questions. And so that's where you jump on a call with your customer success manager or myself to be able to guide you, answer your questions, and then make sure that you're on the right track. And then we have a weekly call every Thursday that we encourage at least jump on that call, because we'll be able to deep dive into your situation as a group, as a team, and kind of like iron sharpens iron. So like what somebody over here has a question with and they get an answer to, it's going to spark more questions for the individual over here as well. So it helps out. So people are going to need to,
when you're on that, does everybody just hold up their stack and see who's got the biggest stack, or how does that go?
Yeah, it's a competition on a regular basis. We give out awards for this stuff, but yeah, people need to also open up bank accounts in person, reach out to our bank relationship managers to help them with their application. So it does take some time.
And what's the most access to capital that somebody's put through on credit cards? Like the most you've seen when you total them all up across all of them?
Like somebody that has received the most amount of funding, or what do you mean exactly?
Yeah, most amount of funding. So you said like there was the one person who had 1,700 cards. What did that represent in open capital?
I think I don't know. I don't want to butcher it. I know it was in the millions. I believe it was like 3 point something million is what that individual had. I don't recall though what that makes up.
So is your goal to get up to the Billy? Get a Billy on credit cards?
In credit cards? It's not going to be in credit cards, no. But so think of it like this too. The rich do exactly this. It's a great example of it, right? For example, like Google, right, or Tesla, right? Like they have all the money. They don't need credit, right? They could.
That's
right? However, they get credit from the banks. And they get the best rates. I'm talking 1-2%. Even in today's economy, okay? They're getting crazy, unbelievable rates that people like you and I can't necessarily get unless you're using credit cards, okay? However, they're getting those. They keep the liquid cash on deck, on hand. They leverage the banks, and then they get the tax benefits, okay? It's exactly what the rich do. And so if the rich do it and it's good enough for them, like Richard Branson, Elon Musk, Jeff Bezos, like if it's good for them, it's good enough for you and me. And we just got to learn exactly the techniques and tricks on how they're doing it and just put our own lifestyle to it so that we can do it as well.
Yeah, that makes total sense. Well, dude, man, this has been enlightening. I've never looked at credit cards this way. The only thing I've looked at is when we have to get statements and stuff for mortgages, and if it gets over 10, we're like, man, that's a lot.
Yeah.
But now I feel like that's a little.
Yeah.
And
You'll
so
never look at credit the same again, my friend.
No, man, no, for sure. I love it. So for people to reach out to you, obviously the easiest way to go would be the Credit Council Elite.com website is the super easy way to do it.
Yeah, I recommend just go to the website. It's www.creditcounselelite.com. There's a quick 10-minute video on there that explains more about like what the heck I'm talking about, what we do, what we really specialize in. And it's going to help answer a majority of individuals' questions if this podcast hasn't. But afterwards, it's going to spark better questions for you to ask. And so you could schedule a one-on-one call with me or our team to go over your situation, where you're at, where you're looking to go. And if it makes sense, we'll tell you exactly what it looks like to work with us. Otherwise, we'll just give you a list of like 10 banks that we've used heavily in the past to get $50,000 from each. So you could do it on your own. It's not easy. It is very detailed. So we encourage,
No, it sounds very detailed and very, you need somebody to give you guidance. Like that's the first thing that is to me. I'm like, man, you almost want to just hire somebody to do it.
Yeah. Like don't try messing, because there's so much, like you could go to YouTube University, right? And for a majority of things like real estate investing, you could get great information out there. For many industries, yes. When it comes down to credit, there's a lot of info out there. It will confuse you, number one, and it will allow you to make a ton of mistakes because of the confusion. And that's why the hand holding is so crucial. I can't stress that enough. So book a call with us. It's no obligation. It's totally free. I pay for our guys to actually jump on that to go over your situation. Otherwise, you can just check me out on Instagram. You know, it's Credit Counsel Elite on Instagram, or my personal, it's Brandon Elliot Investments.
That sounds awesome, brother. Well, Brandon, it's been an absolute pleasure chatting with you today and going over this. I want to get my big stack. I guess I got to move to the U.S. to do that and bring those things back up again. Boom, boom. Look at that. That's an investment right there.
That's right,
awesome, brother. And this is the money. This is the mindset. This is the mentoring podcast. We'll see you on the next one.
Thanks, Steve.